Good weekend. Ira Epstein with your financial market wrap-up. And this wrap-up is your weekly edition. We'll look at weekly charts for this Friday. And this is the 2nd of February, 2024. Wow. Just take a look. So we had a week where we took a look at the Federal Reserve, what they're looking at. And as you know, Fed Chair Powell pretty much quashed the idea of a March hike. He left the door open, but pretty much saying, nah, he doesn't see it. It's probably going to be a bit later than that. Let me tell you now, like a bug that's quashed. Look at these numbers, and we'll talk about what this just happened. You get the U.S. jobs report. Remember I said it was going to be a two-step dance. You had the Fed, then you're going to have the jobs report. You got to pay attention. And for those of you that get my written updates, I've been saying this for a while. I said, anyway this report came out, I said, if it was on the idea that you were going to get something good, it would be about 160,000 jobs to say, you know something? It looks like it is on the path where we're losing work. And the outlier number on the upside was about 215. You got 353,000 jobs versus the expected median number of 185. Unemployment stayed at 3.7. You revised upward the December number. I believe you took November up a little bit too, by the way. This is the time of year when you do all those revisionments. You've got the unemployment rate for Dec at 3.7. And then if you look at what happened in the private sector, wow. They added here 160,000 jobs. You take a look at government payrolls up, not as big as you would think. So I like that the private sector added because the government, a little different to me. Participation rate, that was disappointing. We'd like to see it increasing. It's not, in terms of wage pressure, it's still there. You were expecting 4.1%. You got 4.5 year over year. And for the month, they were looking for 0.3, and they got double that. Now, on an annual basis, some 266,000 jobs less through March of 2023 on a rolling basis, if you take a look at what that did. And before the revision, the job count for 2023 had been estimated at 2.7. So it's now. You heard what I said. We're adding now, which is the strangest thing. And I'm sure the Fed is going, what the heck is that about? On Monday morning, you're going to get the S&P Global Group. They're going to come out with their January service sector. And on the ISM, we'll get that in the morning at 9 o'clock, and we'll see what happens. But they're looking for it to stay at an expansionary number. Over 50 is expansion. So that's what the market's looking for there. All right. So in the chart action, the first thing that happened is most currencies got smashed. You take a look at this, the dollar roars. I had been looking, as you know, for 103.90 to 104. I had pretty much given up on it after the Wednesday Federal Reserve meeting. I said, you know, we got to 103.65. I don't know if we'll make that count. You're right there. Hit it on the head. If the dollar's up and you're going to hold interest rates higher, is that friendly metals? Absolutely not. Metals don't pay interest. Away you go there. Bonds and notes, they just heard they're not going to be cutting rates. They get hit. Anything priced in dollars should have come down. The soft markets didn't do it the same way. They held on better. Now, you can see that Brent isn't holding, and we knew that there were going to be things going on. First, the Houthis have fired missiles now a lot in Israel that was shot down, but they tracked it. The U.S. has struck in Syria and Iraq some of the rebel spots. So we have begun the most televised and the most telling our enemies to run for the hills because we're coming, and get all your key people and everything hidden so we don't kill them and hurt them. So now we're doing attack, and for sure they'll show the damage we're doing. This isn't how you conduct warfare. On Tuesday afternoon, we'll be striking you. Can you move your things? We don't want to hurt anybody. Whatever. This coming week, you're going to have a lot of talk about the natural gas. What do you do with that, with the Biden administration wanting to stop new projects? The word is new. The old ones are going on. Are we close to a border deal so that we can get money to Ukraine and Israel? And how close are we getting on a budget? All right. They make it sound as though things are getting better. In Israel, there's right in front of Hamas now. Will they accept terms that apparently, I use the word apparent because I'm not part of it. I read in the press, Israel's agreed to some short terms. Hamas is not going to get Israel to stop this whole war. They can. The heads of the leadership were to leave and they could get a way to dismantle this. I think that Israel has probably had its stomach full and it would stop this, but there's going to take a lot to get that done. And it is world condemnation of Israel. I mean, you hear it all the time. Chicago City Council condemned them. I watch the kids from sea to land to sea. They don't even know that they're saying genocide. You know, it's a shame. The schools in Chicago should all be shut down. Genocide is not what you preach. In the E-mini S&P, as you can see, the market pretty strong on a monthly basis, a new all-time high, starting off up 2.25%. All right. The weekly charts, how many weeks do we keep gaining in these markets? What is it, 13 or 14 weeks in the cash market? Futures at a new all-time high up here. You just keep moving. Do you remember being down in October? Do you remember me writing my report for you when I did my first of my special stock reports? I did it early here, right in this area. And I said, October down, November up, flattened first part of December, then you accelerate into the Santa Claus rally. I didn't expect the market to keep going all through January, and it has. That is the surprise to me. We have an outside week up. What's the importance of outside weeks? There are two things. Number one, they're a continuation pattern until this low is taken out. Now, if that low is taken out in the first 2 weeks, in other words, next week or the week after it, it is a sign that the market has made a short-term peak and an event to the downside is probably ready to take place. So I keep my eye on that. The swing line certainly to the upside. You can see it. The arrows are still pointing higher. You have an embedded reading, bullish. Next target, wherever the Bollinger Band is, it'll be higher than 50.80. Now let's stop there for a minute. How many of the analysts at the beginning of the year were 4,800 in the S&P? We're right through that. We're at 49.80. Next, how many of them were then? The big number was 5,200. And the highest number I saw of any of the renowned analysts, the highest was 5,400. So can we make it that high? Don't know. When you come to the Dow, embedded reading, all systems go. So jobs driving the economy. Let me stop everybody. Is there any shot you're going to get a recession, let alone this idea of soft landing, when this many people are all working at one time? I got to tell you, the answer is a flat no as far as I'm concerned. Sorry, I forgot to turn that off, but I'm not going to leave the screen. Higher lows, higher highs. Then we come to the NASDAQ. You can see how the market is staying with its embedded reading, moving to the upside. I'm looking for the 18,128 level as a possibility. What's been the weak sister here? Two markets. The NASDAQ, no, it caught on fire now because of what's going on. It whipped me this week. You know, early in the week, I had long positions. I don't mind saying this. Came down to the point, had to come out. And now, of course, I'm sitting here and every night I'm going to bed and my head's in my pillow crying that I got out and the market just picked itself back up. And I'm not being funny, okay? I'm really upset. The one I've got right is the Russell. I listen to all these analysts. Everybody wants to be first. Now, in all fairness, eventually a broken clock gets you something. But you have been wasting your money trying to be the hero in this index when the other indices have all moved to the upside. This has been a place to nowhere. In the 5-year note, be careful here. You could be coming back now to the 18-day average. You are overbought, looking like you want to correct, and obviously the Fed's going to stay up higher for longer, okay? I don't think they're going higher any further than we're at, but staying higher for longer. 10-year note. You just lost the embedded reading, so the market is saying possibly the 18-day average in play. Dollar index. I have been looking, and you know it because I've been here with you doing it over and over, for this whole area of the 18 to the 100-day average. I'm getting it. This is a rally in a market that I think We'll look back at it in a month or two and it'll be back in a downtrend, I think. I don't know. But I think this is a bear market rally right now. In the eurocurrency, this is where the market should have gone to if it's matching the dollar. That doesn't mean it can't fall further. So we have to wait and see what's going to happen. We have to see pieces of news that come out. A good piece would be a budget deal. That would probably do things positive for some of the dollar, could prolong the move. There's many things that could be happening right here. In the Canadian dollar, we have a market that's in an uptrend. It's run into the buzzsaw of the 100-day average and the Bollinger Band, 100-week average. When you run in the first test of a 100 or 200-week average, always look. More times than not, the market will want to pause, especially if it's with the Bollinger Band. On its own, it can do it and not do it. You can see these zones as to how they work and back here. The 200-day, though, will give you an awful lot of data. 200-week, in this case. Used to the daily charts as we talk. The yen, another market that I lost on this week, and yet here you are down 1/4 of a point. I wasn't right. So, I love all these guys on TV that are right all the time. In fact, they're never wrong. I didn't have a good week. Did I lose for my clients big? No, $400 on a futures and 6. I've got the records to prove it. But I was wrong, and I left money on the table. All right, you can't win them all. And what screwed me was obviously the big reports and the earnings. And the earnings aren't over, but these 2 big reports. Okay. In Bitcoin, I don't think the market's going down as much as people think. I've heard people talking it's going back here. Prove to me you can even close under the 18-day average before I can make a statement. Then the differential between Brent and WTI. Okay. Today, the strong dollar impacted crude. All you had to do is look at what happened once we got the jobs number and you saw the oil markets just come down. And they have had a bear market rally. What do I mean by that one? Do you disagree that the market had oversold condition? We have been underneath the 18-week average in red. We got down to the 200, held it, and we rallied back up. Now, what do I teach? When the market's under the 18-week, because I call that the line in the sand, if it's under it and you get a rally, it's often a bear market rally to it. And that's exactly what I think we had, and no more than that. Same thing exactly here. And this is with all the ship lanes still closed, the Houthis still firing their missiles. Now they're going at Israel on land to do it. This is still with the U.S. today attacking Syria and Iraq, and it was broadcast it was going to happen. There were articles galore this morning it would be today. Why? Because the servicemen that were killed arrived back in the United States today, and what a day to attack back for it. I mean, the logic was there the whole time for it, and the market's not responding to it. So things you got to think about as to how this works. They're getting very creative. Land routes are now being used to transport some of this oil as well. Then we get to the heating oil market. Again, a market that was a bear market rally into the 18-week average of closes. So you put it together. You've got this jobs report that's strong as can be. It just keeps the Fed on hold longer. That doesn't mean we won't see that these numbers start coming down over time. We keep hearing one thing. How many corporations are now laying off workers? Eventually that's going to come on. You're not hearing, we're going out to hire 20,000. I'm not hearing that at all. I'm hearing chip plants being delayed a little bit. I'm hearing different corporations laying off in different divisions. I'm hearing EV being pushed back, not going with that. Please pay attention. That will come home to roost. It's a question of timing. Want to remind you that I cover this and so much more in the mornings as we go into the video. At 5 in the morning, I record a video. The price of it to get it for 22 business days is about the price of a cup of coffee. That coffee's going out of your system in 4 or 5 hours. This is going to be there 22 days. You're going to get a weekend edition, like we're doing right now, weekly charts. Then you're going to get daily. It's all about charts. Yeah, I'll throw in a few things here and there. I'll be snide about politics, both against Trump, against Biden, whoever I'm against. But The idea here is to bring the politics into what the market is doing. How do you get this? It's so simple. You go to iraepstein.com under the word research, move your cursor to the top there. All I need to do in that 22 days is give you an idea that you're already thinking about, show the chart and why it is. And if I don't cover the chart you want, write me. Your subscription will include me creating a private video for you so I cover the market that you want. Fair enough? Give it a try. iraepstein.com. Talk to you all later.